In the meantime, the so-called anchor stores of malls like Sears and JCPenney's are disappearing, and even mall staple BB's is reportedly closing all its brick-and-mortar stores. So with malls suffering what feels like a retail ice age, why is my next guest saying bye? He's Gradient Investment Senior Portfolio Manager Michael Binger. Hey, you're warming up during an ice age? Make your case.
Well, I got to tell you, I really think the whole death of brick and mortar retail thing is way overplayed. I understand e-commerce is starting to take over, but I still like to go and see a tie and put on a jacket and that kind of thing, and I think people will. Retail is pretty cyclical. It goes up and down, but one thing that is not cyclical is the mall rents that Simon Property Group gets. They have consistently grown their earnings 5 to 6%. They pay a 4% dividend yield on top of that. I think it's a pretty good way, and by the way, it's a great time to get in on the stock to earn about, somewhere 8 to 12% on an annualized basis.
I'll give you this. It is just a couple of dollars above its 52-week low. I really can't stand when people come on and say, buy now, and it's at a 52-week high. It's well off its 52-week high. Right now, it's at 169. I believe the annual high was 229. So, okay, there's a bargain there.
Yeah,
give me your sense right now. Well, look, the NASDAQ is about to close at an all-time record high, even as we have seen multiple gains since Election Day for the NASDAQ, S&P, and Dow. How long does this continue? Do you expect a little bit of a correction, and when?
I think you're getting very close to seeing it right now. The S&P 500, which is a much broader market than the NASDAQ, is up close to, I didn't say 14, 15% since the election.
10.7%.
That's not since before the election. So before the election, it's up a lot. Okay. Yeah, and, that's a big run. So I think we're due for a consolidation, not a crash, but a consolidation, which means somewhere around 5%. We're still constructive in 2017. The Trump bump, I think, is stalled out right now, and I think that's what's going to cause a little choppiness in the market due to investors kind of wondering, boy, when are some of these initiatives actually going to take place, if at all, on the executive level? So really, I think expect about a 5% correction from here, but then it's time to jump in because the economy is good, corporate earnings are good, and I think the administration is going to have a muted effect.
15 seconds left. What would you avoid?
Well, I would really avoid jumping into the things that have really led the market in this recent rally. And those are, when you think about it, there's some of the real high-priced, high PE, if they have earnings at all, a multiple. Avoid some things like, Apple, Amazon, Facebook, some of these stocks that have really ran.
Good to see you, Michael. Michael Binger, Gradient Investment Senior Portfolio Manager.